And welcome to this special on-demand webinar from Wolters Kluwer Tax and Accounting UK. My name is Phil Hobden. I'm the head of the digital sales team here at Wolters Kluwer, and today I'm joined by my colleague and fellow podcast host, Ollie Kiddell. Good afternoon, morning, or whatever time frame it is whenever you're listening to this. I always get that wrong.
Hello, viewers.
So we are here today to do a special on-demand webinar around the concept and the topic of forecasting and reporting, why it's important to accountants, to clients, and why over the last few years it's been even more important to understand your numbers. Today I am joined, or we are joined, by two great guests. Firstly, someone I go back quite a long time with. We used to host a podcast together, and we did a lot of work together during the pandemic on exactly this, right? This whole concept of forecasting. So my first guest today is Kirsty McGregor, founder of the Corporate Finance Network. Good. Well, hello, Kirsty.
Hello, Phil. This is real flashbacks, isn't it? And I want to just elbow Ollie out of being your co-host on a podcast. How dare he? That's my job.
It's not happening.
And we are also joined by Ella Doherty from Aviatrix Accountancy. Good. Oh, well, hello, Ella.
Hello, Phil. You said it so well previously as well.
I messed up.
Aviatrix.
Aviatrix. Yes, I knew it as I said it. I choked. I knew it. That's why before we came onto the webinar, I was like, "How do we pronounce this?" So look. I'm going to kind of start with a broad opening question, and it's kind of, I guess, Kirsty, maybe I'll go to you first. But in terms of forecasting, we've known we saw during the pandemic that forecasting, or actually, if you take the term forecasting away from it, understanding your numbers has been critical for businesses. And as we move and continue to move through relatively uncertain times, right? How has that changed, that need for a business to understand their numbers more and that ability for an accountant to provide that? How has that changed the relationship between the accountant and the client?
Certainly those clients that do forecast projections, planning, whatever, with their accountants and as a team, looking forward, in other words, rather than just looking backwards, they are going to have a closer relationship. It stands to reason. If you're only looking at historical data, you're in nowhere near as strong a position as if you're actually looking forward as well. So it has those firms that probably only did forecasting for the purpose of CBILS, loan applications, or one-off exercise during the pandemic. Hopefully many of those have kept it going, because it isn't just a static document. It's got to be something that's kept agile, it's fluid, it adapts as the numbers come in and the situation changes. And look, we thought the pandemic was a once-in-a-lifetime experience. We have now had 3 once-in-a-lifetime experiences as well, with the situation with the banking crisis that's going on at the moment. We've had the Ukraine war, we've had COVID, we've had all these things that are still changing the cost structures of businesses. They are affecting the decisions that business owners are making, and they've got to look forward to where their business is going. They've got to have a plan. So yes, if you did it as a one-off, bring it back and make sure it's part of your regular reporting and discussions with your clients.
And Ella, how about for you as an accountant on the front line that is helping their clients through those continually uncertain times? And I think Kirsty put it best, that we've had 3 once in a lifetime or once in a generation experiences coming almost back to back now. How about for you? How has that relationship changed between you and your clients? Well,
I will actually go back further. I mean, back from when I was training and working, there tends to be 2 types of clients that historically I and other accountants have dealt with. There's those that just see us as a compliance overhead. They have to file their accounts and they have to file their tax. And then there's those that use us as people who can help them sort of plan their company and plan their future. So I mean, I've been helping clients with their forecasting and their budgets easily for the last 20 years, no question. So I think there's more now. I think more people are beginning to realise the benefit of trend analysis, forecasting and budgeting. And especially, as you say, with the things that have happened over the last few years. But it's always been there. There's always been the people that have recognised the value in it.
Ella, just on that, do you think, going one step further, do you think it's something that clients have even come to expect in the industry now? Because where I view this from, you know, I'd see the word advisory taking over large swathes of the market, particularly over the last, well, number of years, the last 5 years or so, certainly. It seems to me, and forecasting is clearly a very important part of that, it seems to me that there's a growing expectation from clients that accountants will provide that kind of insight and those kind of services.
Yes, certainly I specialise in aviation and transport with my clients, and certainly with these kinds of businesses, they're multinational, their growth, they've dealt with a lot of things in the last few years, as you can imagine, and yeah, they come on board with the expectation of managing, you know, the reporting and forecast reporting. That's one of the initial conversations that we have is, you know, what can I provide them in that area? Obviously, with other kinds of businesses, they tend to rely on, this is how we've always done it, so this is how we're going to do it. But there's always the time, even with those kinds of businesses, where all of a sudden something will happen, or somebody will come to us and say, well, hey, I want to retire in 5 years, or I want my child, you know, who's been working within the business to take over from me. How do we do that? And planning for that also works. You know, we also need to help them with that, and forecasting is a great part of that. It's creating a roadmap really for them.
Kirsty, obviously during the pandemic, you did some pretty astounding research alongside the ACCA around the amount of businesses that were forecasting or had a forecast. Do you want to talk us through what some of those numbers were, kind of pre, during, and kind of moving towards post-pandemic, and what you saw in those trends in terms of kind of people bringing forecasting and doing more of it?
Yeah. So you caught me on the hop here. I haven't got the exact stats to hand, but from recollection, it was less than 1 in 3 at the beginning were, you know, the type that Ella's talking about, the businesses that would always have done this type of planning looking forward. And it grew to more than double that during the pandemic. But as I said, it was probably down to the fact that they had to do it for a business plan for a bank. Certainly when the CBILS coronavirus loans came out, it was only the high street banks that at first that were lending, that were set up to offer them. And they were very old school and wanted a full business plan, full projections and so on. As we went on later, the challenger banks came in and the other lenders came in, and they didn't necessarily need as much detail as that, and they would use historical credit scores and so on instead. But that was really why there was a big peak. I think really now, going forward, to Ella's point, that certain businesses tend to want this and others haven't really seen the advantage of investing in this. I think there's probably 3 areas that would make it absolutely worthwhile for a business to think about forecasting. The first is, without a plan, you just drift. And at the moment, as we're going into this, well, not going in, we're still in this downturn or low growth, no growth economy, and we will be for the foreseeable. It's very difficult for a business to grow in that situation. So unless they have a plan, they are just going to drift. The second reason is that they need to be able to adapt their plans. Excuse me. And if they don't know where they're going, then how do they know if they're going to need to adapt them? Now, that being agile and changing plans could either be that they may need funding, they may see it as a cash flow gap, it may be that they need to cut costs, it may be they need to invest more and grow more in certain areas. And it may be that they might be overtrading and not realize it. So unless they are looking forward to the margins and their cash flow, their working capital, they're not going to spot that. But the third one, and this really came out during the pandemic, Phil, when we ran the Leave No Business Behind campaign, is that the beauty of having a plan is that it gives business owners some peace of mind. You know, there is something there written, it's something that they can follow. It doesn't, you know, and although it might not be one plan, there might be 3 options because you just don't know which direction things may go in. I mean, who could have predicted where we've ended up? You know, and we thought it was bad during the pandemic and things have carried on since. So there are going to be different plans, there are different versions of it. But at least if there are some plans, there is something in writing, there are some strategies, then the business owner is able to sleep at night. And that makes a huge difference to the way that the business runs and all of their team around them, if the business owner is feeling in control.
And to that point, one of the things that was most interesting for me around the Leave No Business Behind campaign and everything that came out of it wasn't so much the statistics around funding, although that was always fascinating, the funding and forecasting side. It was more around the statistics around mental health and the impact around that. And whilst a plan and a forecast and that is only one step to that journey, it was definitely a key part of that journey, understanding your business, understanding your challenges, and actually realizing that there was ways that you could be supported. So it definitely plays to that kind of that plan and that future look and that comfort around whatever's happening to the business, right?
And it also makes the accountant feel that they know what to do with a client, because accountants are not therapists, they're not psychologists, and yet they were often put in that position at the peak of when we first went into the lockdown, where there was panic and really concerns around people's emotional health, mental health. And how is an accountant going to work through that? Well, they've got to do something practical, haven't they? And they feel much more in their comfort zone if they are offering practical support to the business owner in terms of, let's sit down, let's do a plan, let's look at the options, let's see where we're going to go from here. So I think it helped not only the business owners, but also the accountants to feel a little bit more in control and less of that rabbit in the headlights, what on earth is going on?
Yeah, I drafted... I was going to say, I drafted a piece for Wolters Kluwer, which hopefully will have been published at the time that this video comes out for our viewers. But I wrote in that accountancy is not just a numbers game, and the importance of a relationship of trust between accountant and client. And I think that's what we're getting at when we talk about, you know, peace of mind and mutual understanding of where we're heading and so on. Do you think, Kirsty, that since the pandemic, clients have a clearer idea of what kind of insights they want to hear in terms of forecasting from accountants, but also which ones they need to hear about? Because I think the two things are different, particularly when you consider the sort of emotional investment that clients will have, particularly if you're talking about small businesses and so on, ones that they've built from the ground up.
I think it's really important that the time that you spend with a client working around this is valued, and therefore it might be that you focus on certain KPIs and not necessarily others, you know. And there's been a lot of studies historically about, one in particular by Bain and Company in the States, BAIN if you want to look it up, around previous recessions and the impact that businesses have had during a recession. And what they found is that the businesses that didn't get a grip of the situation in a recession, the ones that just survived, they survived, but they didn't grow for a long time afterwards. So, you know, maybe 10-year period they looked at. Whereas those that really made a difference and actually were able to grow, were able to put plans in place, you know, took the bull by the horns and looked at cutting costs and looked at then making acquisitions or growing, they continue to grow post-recession by, you know, 40%. So I think that's the story, is that it's if you can educate your clients around the importance of this, A, that it isn't going to take a huge amount of time if we just concentrate on certain KPIs that are most relevant to your business. But B, that if we don't do it, then it's going to have a very long-term impact on the business going forward. Educate and coach your clients around the importance of it, and then they'll take it on a lot more readily.
Yeah, 100%. I think that's a really good point. Ella, what's your thoughts on that, about kind of on the insights and what clients need to hear?
It all depends on the client. I mean, some clients, as Kirsty was saying, they depend on different KPIs and different information. I mean, I've got clients who are not very number literate, and by that I don't mean that they don't understand numbers. They do. They run businesses. But when faced with a balance sheet or a profit and loss, for instance, or even a budget, to them it's a lot of numbers, and not everybody understands them in the way that your accountant will. So, for instance, I've got a client who prefers their management information in the form of pie charts, so they can see, where and they, the income is the income for them. But they want to know where their outgoings are going, and they want to see, the proportion of these. So it literally depends from client to client. I mean, I can do 3 or 4 different sets of management accounts and forecasts, and they can all be completely different and have different colour schemes.
Yeah, it's interesting. I mean, I've spoken to a number of Wolters Kluwer customers in the recent past, as did my predecessor as concept manager. She worked on a case study with them, and they were talking about the way in which reports and forecasts can be presented. And you mentioned pie charts there. They were talking about how visual graphics, that kind of visual stimulation, it's easier to understand, but it also prompts a lot more questions from a client, and therefore those exchanges between accountant and clients are more productive. You get more out of them. Yes,
and also it's easier for them to understand. I mean, if you're saying, well, what sort of sales and cost do I want to achieve this sort of reserves in the next couple of years, you can talk to them numbers and they'll get it, but they won't necessarily follow what you're trying to say to them. Whereas if you demonstrate with, say, a graph, and with their income and with their profits, showing us different lines, that it's easier for them to see. And then they will feel more comfortable. Like, why is this figure here? Why are we got this kind of cost in this month and not that month, and that sort of thing. So yeah, it definitely helps to be able to not just give them numbers, because to be fair, if they wanted to see how much their costs were last month, there's lots of bookkeeping softwares out there that will do that for them. If they're not getting the information from that, why just give them numbers again without some sort of graph or chart or something to assist with that?
Kirsty, could I just bring you in on that point as well? The what the best way is to present these kind of findings in a way that's, as Ella was saying, in a way that clients will get, that they'll appreciate not just the numbers themselves, but the direction you're trying to take them.
I think it all comes down to involving the client early on in the process of putting it together. So rather than doing it in the office and presenting it to them as a fait accompli, you actually involve them in the process of how we have created them. So asking them questions around what they think their volumes are going to be, what they think their prices are going to be, what they think their costs are going to be, and credit payment periods and so on. And then they'll see it come together. And if you can do that in front of them and use the software with them, then it becomes a lot more accessible to them. And then using that data and manipulating that data to look at decisions going forward. So, for example, a lot of what if scenarios. What if we put our prices up by 5%, but we expect we might lose 3% in volume, for example? Put those numbers in, see what the end result is on profit, see what the end result is on cash. And that, I think the cash flow is a lot easier for them to understand anyway. You know, and that's like hard cash. You can see whether they're within their bank limits or whether they need more funding at that point. So I think that's a couple of things. Involve them in the process, and also then use that data to manipulate it and help them with their decisions going forward. And then they'll really see the value of having them and keeping them by, you know, the way that cloud software is now automatically updating the historicals. So you've got a live set of numbers going forward as a projection or a plan is fantastic. You know, it does not take a lot of time nowadays to update those historical figures. It doesn't have to be a whole new exercise again. So it can be a very fluid, living document.
It's interesting. I remember, like, obviously I started my career eventually I got to banking, and I was working in small business finance. And I remember, like, some days you'd see people come into the bank and they'd come in for a bank loan and they'd literally have their figures written on the back of the cigarette packet. I mean, I literally saw that once. And then one day someone brought in a report from an app within the ecosystem. And I was blown away. I was absolutely blown away that someone had come in with this graphical interpretation of their numbers that actually looked at the different plans, the different options, the what ifs, and they presented that as part of their funding application. And my mind was blown. I was like, wow, finally, like, I'm seeing something that actually justifies the investment, because we'd have to sell that investment and that lend to the underwriters. We'd have to say, actually, we believe in this because of X, Y, and Z. It's hard to do that when someone comes in with the back of the cigarette packet numbers, right? When someone comes in with a detailed report, and I'm guessing, Kirsty, you know, you've been involved in kind of much higher end finance, right? Like within your world. But that kind of the ability to display numbers to both investors and to finance houses or businesses. I know, obviously, you work alongside Capitalize as well. You know, having something that can actually show your business in that kind of light must be hugely positive. It must really give kind of an added value to that application or that investment, right?
Well, it was essential back in the day, wasn't it, that you had to create numbers and you had to demonstrate both your historical and your future plans, because you know, there was no other data available. There wasn't cloud data, there weren't credit scores that were widely used, and there wasn't open banking and all of the quality data that the lenders have access to now that's in their domain. You know, you'd be astounded if you saw what data they do have access to. But back in the day, there wasn't that. So what I always used to say is putting applications in for lending or investment was that you have to do the underwriter's job for them. You have to not give them work to do. You have to answer all the questions that they may be asking, and in a way that is simple, you know, with simple answers that is backed up with evidence, with assumptions that make sense. And to a certain extent, that's still the case, but it's changed as well, because, as I've said now, it's less likely that the new lenders, the challengers, are going to be looking at a paper document or even an Excel spreadsheet or a report going forward, unless they have already reached that stage in the process of underwriting. So immediately now, some businesses will be cut off before they even get to that stage, because their credit score isn't high enough, and so they're not going to meet the credit hurdle, and they don't even get into that arena. But once they are in that arena, and then they're trying to persuade the lender or investor that this is a low risk proposition, that's when you can step up and offer all this extra information that will support an application or an investment, and will hopefully give a good view and show that the work's been done. It's as much about strength and confidence of the management team that a lender or an investor is looking for, to believe in that management team, to deliver on their promises and their plans, as it is about, you know, them actually just presenting the numbers. It's the fact that they've been through that process that gives confidence to lenders.
Ella, I wonder if I can just expand on the point Kirsty was making about the quality of data and the number of data points and information points that are now available to accountants and businesses. And I suppose there are two things that strike me about that. One is that I think we learned very much during the pandemic how important it is that data is as contemporary as it possibly can be, and that the optimum position to be in is to have reports and forecasts based on data that's been obtained in real time, but also the importance of having that complete 360-degree view of a business, you know, the right combination of reports and forecasts, both for those who are running business, for shareholders, investors, every audience, to ensure confidence across the board.
Yeah, and of course the other thing that is harder to quantify but is also every bit as important is the non-financial information. So for instance, you can present what's happened with a business over a period of time, but without the context of the running of the business, of outside influences, of non-financial information, it can ask the wrong questions. And especially with, as Kirsty was saying just now, I mean, there are businesses that have low credit scores and don't even get into the underwriting arena, in which case the directors in those situations will go back for personal guarantees and personal loans for their businesses. There's not just business loans. I mean, a lot of directors, shareholders will go for a personal investment where they can't get company investment. And it's the non-financial information that you can present to any lender alongside the financial data that is every bit as important. As I said before, you could have a company that's changing hands, for instance, and so you'll find sudden changes in numbers because of a change in management of that company. Or, you know, there could be a bereavement, there could be a change in direction, there could be that they've purchased a subsidiary, any number of different things that you won't necessarily get from a balance sheet that have to be included. So, yeah, and when you're talking about a 360-degree analysis of any business, those things have to be brought into consideration as well.
I think those are really, really good points. So look, we're coming to the end of this webinar. And by the way, I could talk to you two about this all day long, right? Talk about specialist subjects and all that. But so maybe kind of just a quick answer on this one. We know it's important. We've kind of discussed why it's important. We've discussed it was not just a pandemic thing. It's moving and growing your business through. So for the accountants listening that have clients that maybe are hesitant to do this, what would you say would be the one or two things that they could say to really kind of encourage businesses to consider actually taking this look at their finances, getting this long-term view? And maybe Kirsty, I'll come to you first, and then to Ella, if that's okay.
Short straw here. I'm having flashbacks to questions that you used to just throw at me at some of the podcasts here with no warning. Okay, what I would say is, if you've got a client that's reluctant or nervous or unsure about the value that you're going to be able to demonstrate, I'd focus in on their challenges, and I would ask the client, what are your biggest challenges in the business at the moment? And they will either say cash flow, they will say team engagements, they will say pricing, whatever it is that they say are their biggest challenges. Say, what if we can understand that a little bit more and think about possible solutions to those challenges by creating some projections, some cash flow forecasts. Now, it might be that you don't need to do a full 12 months. It might be they only need a quarter. or they might only need week by week. And there's different, software out there that provide different services. So that's what I would ask. I'd say, what are your challenges? And I think this will help. This process will help you understand some answers to those challenges. Perfect. There you go, Ella. I've bought you a couple of minutes there to think.
Thank you, Kirsty. Well, no, I would go one further. I mean, what tends to happen with my clients is the pre-year end conversation. When we're talking about, when I talk to the clients and they talk to me about their year end, how their year so far has gone, and what they expect from their year end accounts, which tends not to be a big surprise. But then we take the conversation further. It's like, well, okay, well, this year's nearly done, but what have you got planned for next year? For instance, is there going to be a share purchase, or is there going to be a capital purchase? Are you going to be moving offices, hiring staff? And as soon as those conversations are entered into, then, the use of some forecasting to help with those answers, because they'll ask me the question, if I take on 2 members of staff to do X, Y, and Z, how much is it going to cost me? How's this going to? So it's a brilliant tool for answering the questions that the clients have, is the short answer. And especially when you start talking about the future and what they want to do with it.
Can I pipe in? I've got an answer to your question, Phil.
Oh, go on then, Ollie.
Watch this video. That's what they should do. They should watch this video.
Yeah, and you're absolutely right. Look, Kirsty, Ella, it's been really great talking to you both today, and thank you so much for taking your time out to talk about this. Like I said, it's a subject that's close to my heart, having worked in that reporting space previously, and then through finance and all these things. So forecasting has been quite at the heart of what I've been doing. And Ella, obviously, you're the user of our own forecasting tool here at Wolters Kluwer, FinSit, and Kirsty, we've worked together previously around that pandemic piece. So I couldn't think of 2 better people that were placed to be able to come in and have that conversation. Ollie, thanks for joining me and co-asking the questions once again.
Pleasure as ever, Philip.
As always. Okay, Oliver. And of course, don't forget to check out wolterskluwer.com for more information about what we're doing here. And if you are interested in learning a little bit more about forecasting and reporting, we have our own tool here, FinSit, which we can also talk to you about at a separate point. So again, thanks, Kirsty. Thanks, Ella. Thanks, Ollie. And we'll be back in the future, no doubt. So thanks very much for your time. Cheers. Bye-bye.